let's start the topic. Write it down. Accounting for material. Okay. Under that, write down first point. Cost accountants. Cost accountants. Cost accountants need to manage inventory. Need to manage inventory. In order to value different stakeholders. In order to value different stakeholders. For students, when it comes to this inventory or the material, that is a significant component in your output. Not now. These principles are developed during early 60s, 70s. Because during that period, the material is the major component in your output. Now it is not. Now, that's why we are talking about now why we should keep inventory just in time. Right. So zero inventory. We are talking alternative procedures nowadays because material is not a big thing nowadays. Right. But traditionally, when it comes to 1970s and 80s, material is one of the significant cost. We always need to monitor that material. We always need to manage that material. Right. In this topic also, we're going to discuss there are so many documentary processes to keep our inventory cost lower, to manage our inventory. Actually, how traditionally we managed inventory, that is what we're going to study here. So if I take these materials, actually the materials are based on order. Normally we ordered materials and we received materials and we issued materials for production. See, we order material at the time we are receiving the material. Once we receive the material, we should issue that material for what? Production. So once you received and issuing, this is what we call warehousing. Or else we can say stock keeping. So we need to keep the stock. We need to maintain the inventory that received inventory and issued inventory. Is it clear? Right. So we're going to study how we're going to order the material, how we're going to receive the material, and how we're going to issue the material. During the time of warehousing, how you're going to manage that material. Clear? So write it down this. Ordering, receiving, issued for production, and receiving and issued for production is we call warehousing or else stock keeping. Copy this. Now in your exercise book, put a subheading, process of ordering, purchasing, receiving materials. Ordering, purchasing, and receiving material. Now we'll see how in a particular organization we ordered material, how we receive that material, and how we do the purchase, right? First, I'll take the stores department. First, I'll take the stores department and production department. Wait, after I finished, you can draw. Otherwise, you don't have space. Production department. So what this stores department will do is, this stores department will issue material to production and it is received requisition from the stores department. So this arrow says issue material to production. Stores department issuing material to production. And this says requisition received from production department. What is requisition? Production department request material from the stores department, then stores department will issue that material to the production department. Right? There are documents we used here. MRN. What is the document? Material requisition note. MRN is what? Material requisition note. That is the document we used here. So production department will send material requisition note to stores department. Then stores department will send MDN, material dispatch note. Material dispatch note. Is it clear? Right. Then purchasing department. Purchasing department. Actually, if the stores department do not have sufficient stock, once their stock level is reduced, the stores department will notify purchasing department. The stores department will notify purchasing department, hey, purchasing department, purchase material from the supplier. Right? So that is we call purchase requisition. What is the term we used here? Purchase requisition. What is purchase requisition means? That stores department request material from the purchasing department. Purchase requisition. So we call as purchase requisition note, PRN. Once the request come from the stores department to purchasing department will search suppliers. So this is external supplier. Purchasing department search supplier. Right? How to search suppliers? Normally we can say, okay, leave it, sorry. So external supplier. Normally what this purchasing department will do is purchasing department will ask suppliers to send quotations. Did you heard about quotations? Quotations, the term. You all are not using that term? Using, right? Quotations like this. Let's say if I want to buy an item from external supplier, you all are suppliers. I gave the product instruction or description to you all, and I ask you to send a quotation. You are sending a quotation. Let's take Raghu is sending 1.5 million, right? And Madhu is sending 1 million. Then Sugu, right? Sugu is sending 1.2 million, and Kishore Kumar Dindukal, right? He is sending 0.5 million, and Kavi Verma, he is sending 7 million, right? And let's take Reddy, right? He sent 1.8 million, right? If you are purchasing department, what will you accept? Lowest. When you are taking quotations, you need to consider two things. One is the price, two is the quality. At lowest price and very poor quality, then what will happen? Again, the production is interrupted. It is not a good decision. For example, photocopy paper, right? 80 GSM paper is 320 rupees INR, right? In Sri Lanka, it is 6,000 rupees. Okay, here how much? 320. 70 rupee GSM, 70 GSM is, let's take 280. Demine paper, you know, demine paper, like a tissue. That paper, let's take 50 rupee. Which one is cheap? Demine paper is cheap, right? I accept that supplier. Now I am taking A4 size demand paper and I'll put inside the photocopy machine. If I put 100 papers, 70 papers scam, right? It's get spoiled. Only 30 papers you can print. If I calculate ultimately, I'm spending more than what I'm going to spend for photocopy paper. Therefore, always we need to consider quotations, the cost and the quality. So the quotations we use to take the cost and we use to take the quality. Right? Within 80 GSM, what are the possible low cost price? Within 70 GSM, what are the lowest cost possible price? After we analyzing all these things, we send PO. What is PO? Purchase order. Purchase order. To whom we are sending? Purchasing department is sending to whom? External supplier. Purchasing order is the formal document to request material from the supplier. If I put a purchase order, thereafter, once it's processed, I can't reject. I can return, but I can't reject because it is a formal acceptance. You got my point? Quotation is not a formal acceptance. If someone is send a quotation, it does not mean we will buy from them. But if I put a purchase order, I should buy from them. It's a formal request. Once you request from the external supplier will send goods to whom? Stores department. You got my point? Fine. So then external supplier will give goods dispatch note. This is what called GDN. What is this? Good dispatch note. What it means? Actually, the external supplier is confirming the goods are dispatched from our warehouse and it will reach to you. Once the stores department receive that material to the stores, they will inspect that particular material. What we ordered, what is received. Both are compared. The actual goods compared against the PO, purchase order. To check what we ordered is only received. Then the stores department will give you a document to external supplier. That document we call goods. Exactly, very good. Good received note. We call GRN. You got my point? So this is the process of material ordering, receiving and recording. Clear? Copy this. The documents, write it down properly. The name of the documents, write it down properly. So what is that from external supplier to stores department? External supplier to stores department, goods dispatch note, GDN. GDN, good dispatch note. Right, okay, fine. Is it clear? Right. Now, see, question, example number 1. Do this question. Now you all know the documents, how it works, right? Now do this question, example number 1. A GRN provides 4 options given. What is the answer? When you received inventory, we issued what? GRN. If we accept the goods in line with the purchase order, once the purchase order is correct and the received goods is also in line with the purchase order, what we do is we will issue GRN. So when we are receiving material, we issue GRN. Clear? Therefore, our inventory records update. See here, update inventory records. When we update inventory records, when you receive inventory, when you issue inventory. At the time of receiving inventory, we update our inventory. At the time of issuing inventory, we update our inventory. GRN is a document we used when we are receiving inventory. Therefore, this point is correct. A. Information to check the correct price. That is wrong. Because GRN means We accept your goods. Right? What is agreed price? Those things comes under the accountancy department, accounting department. Not we are but not going to check that. Information to check the correct quantity has been recorded in supplier's invoice. Supplier's invoice is wrong. Why? Supplier's correct quantity is correct. We will check whether the quantity is correct. But when supplier will send the invoice, after goods accepted only supplier will send the invoice. And supplier send invoice to accounts department directly, not stores department. Clear? And the information to record any unused materials which are returned to stores. This is we call material return note. Material return note. Right? So if I compare all four answers, I can take A. Right? Here, information to check the correct quantity of the goods, right, has been recorded as the supplier invoice. Try to understand, if I get the good received note, if I issue a good received note, in my good received note, I will mention the quantity. Yes or no? This much of quantity of goods we accepted. Clear? Later when supplier send invoice, what we can do is, we can compare this quantity with that invoice to confirm supplier's invoice is right or wrong. You got my point? You got my point? When supplier is sending invoice, after GRN. Once we accept the GRN only, supplier will send the invoice. Once we receive the invoice, what we do is, we take the invoice and we take the GRN copy and we match whether the quantity we accepted, whether the quantity they compute the invoice, both are right or wrong. You got my point? Is it clear? Understood? Right. That perspective you can take C. You can't verify the quantity by looking at the invoice, but you can verify the quantity of the invoice, supplier invoice, comparing against what? GRN. You got my point what I'm saying? Right? So correct answer is A and C. So under this question, write down an explanation. Once, this is the order. First, write down number 1. When suppliers send goods, when supplier send goods, when supplier send goods, when supplier send goods, good dispatch note issued to warehouse. Good dispatch note issued to warehouse. Number 2. When warehouse receive the material, when warehouse received the material, storekeeper will send good received note, GR. Storekeeper will send good received note, GRA. Number 3. Once supplier received GRN from storekeeper, once supplier received GRN from storekeeper, he will send supplier invoice to accounts department. He will send supplier invoice to accounts department. Number 4. Accounts department will compare. Accounts department will compare. Accounts department will compare supplier invoice with GRN, good receive note, to ensure quantity accurate. To ensure quantity accurate. To ensure quantity accurate. You got my point? Number 5. 5, right? So 5. After you are comparing with this GRN and the supply invoice, you know that, okay, this much we received, invoice is also this much, correct, right? Then make payment to supplier. Number 5, make payment to supplier. That is the process. That is the process. Is it clear? Understood? Right. Example number 2. Find out the answer. Example number 2. Find out the answer. Option D. Wrong. Sir. Okay, lifeline. C. Sugu, yes.
Option A.
Option A. Mr. Sugu. All 4 correct. All 4 wrong. Question wrong. Sugu. Madhu. Madhu. அட்டாலும் பால் சுவையில் குன்றாதளவாய் நட்டாலும் நண்பல்லர் நண்பல்லர் கெட்டாலும் மேன்மக்கள் மேன்மக்களே சங்கு சுட்டாலும் வேணாம். When this Kishore said it C, now all decided, okay, that fellow said C, so answer is C. Madhu? C, okay, fine. Raghu? A. Now he's scared. If I say C, this fellow will scold. Ready?
Yes.
A. You too? You? C. Online students? A, B, C. Yes, Sugu, you want to change the answer? Huh? Or else you want to change the question? Question wrong. It's management only, right? Correct, right? C only. Okay. The following documents are used within the cost accounting system: invoice from the supplier, purchase order, purchase requisition, stores requisition. Yes. Huh? What? A. You want to change your answer? You want to change your answer, or your study text want to change the answer? Sugu? You want to change the answer? Okay. A. Kishore?
I got to do.
Okay, now you saw. And that will quickly. Okay. So A. Now what to change? Huh? Why you changed A? You said it's my. I am sorry. I heard it as C. When he said A, but when I was receiving that message, right, I am hearing it as C. I have some problem, hearing problem, right? Kavi Varman, I have some hearing problem, right? So he said A only, but I took it as C. I'm sorry, I'm really sorry. Okay. Hereafter you write that in the airport we put a board like this, right? Okay. Likewise, when you say answers, write an answer and you show. Okay. Because when you are saying I'm taking it's a wrong way, no, right? I'm sorry, Suki. Okay. Okay. Right, fine. Okay. So, first one is invoice from the supplier. Second one is purchase order. Third one is purchase requisition. Fourth one is stores requisition. Which two of the documents are matched with good receive note and not in the buying process? What are the two documents? Actually, invoice is generated after GRA. Yes or no? Therefore, this is the right answer. Purchase order before GRA. We issued purchase order, then goods sent, then we accept the goods. This is also correct. Purchase requisition, that is not the buying process, that is internal process. Stores department request material from purchasing department. So this is what? Internal. Stores requisition, production department request material from the stores department. MR and material requisition note. That is what called stores requisition. That is also internal. Buying process is with the supplier. With the supplier, 1 and 2, correct answer. As Sugi said, sorry. As Sugu said, it is A. Correct answer is A. Right. Sugu. Okay, sorry, huh?
He is asking for 500 rupees.
For what? 500 rupees for what? For this question? Huh? Even I can't give 1 rupee also. This question won't worth that much. Huh? Okay. Sugu, don't worry. I'll give 5,000. I'll give you a question. Okay. If you do that question, I'll give you 500 rupees. Don't. Nine. Summa 500 I can't give, no. Nine. Example number 2. Example number 3. Now try. The first answer I should get it from the Sugu. Okay. What is the answer? You can't open the book. Close the book, will you? Now tell. Oh, Kishore, tell. You know the answer. You saw.
I didn't see that.
Okay. Okay. What about Kavi Varma? Yeah, this is question.
I
Mike.
didn't read it.
Okay. Mr. Madhu? Yes, ready. What is the answer? Give time, man. I'm reading. Sugu, what is the answer? Okay, sorry. A. Sugu. Okay.
So let's see.
A. Still you reading, right? Okay. No, we have time up to 8:30. Don't we read slowly. We read. Madhu, you need time. Okay, don't worry. We have time. Raghu, B. Online students, what is the answer? See, online people very smart, huh? They gave all answers, correct answer. Right. You too. Okay. Now, Sugu, can you, or you need more time? A. Yeah. Yeah. A. Okay. You sure? A. Raghu, you want to change the answer? Okay, let's see. The following documents are used in accounting for raw materials. Accounting for raw materials. Good receive note, material return note, material requisition note, and delivery note. Normally, good receive note is used for accounting purpose because that is the source documents to accept the goods. Received goods, the source document is GRA. When there is a material return, my material account need to be adjusted. Right? Because once I received the same material I returned, then you should reduce it. So the source document is return note. Material requisition note means that not a part of ledger card, stores ledger. Did you study stores ledger in your A levels? FIFO method, LIFO method. That is you all are calling FIFO method. This one? FIFO. Okay, fine. We call FIFO. Fine. LIFO method.
D4 we don't use.
Accounting we won't use. Costing we use. APCO method. Huh? Then you studied stores ledger. In the stores ledger, goods received, good issued. Yes or no? Or goods returned. So answer is, as Sugu said, A. Sugu's answer is always correct. Answer is A. Right. Okay. Correct answer is A. Is it clear? The ordering process understood? Now in the exercise book, write down a big heading, inventory cost. A big heading, inventory cost. Inventory cost. Okay. See, it's like this. Quantity. This one is cost. When you purchase more quantity, your ordering cost will reduce. You got my point? You got my point? When you purchase more quantity, no need to buy every time. Right. Sometime, like in your house, the entire month your parents bought the goods at once. More quantity. But you should have a space capacity to store also. Right. City like Bangalore and all, yesterday I visited, there's a meeting yesterday, right? ACCA India organized sustainable reporting and partnership, right? It happens in MG Road, you all know, right? MG Road Taj, okay? So I visited from my hotel to Taj, right? While I'm going, I noticed both sides, right? My God, what a rush and the buildings, right? Within 500 square feet, I think 5 or 6 people are staying. Huh? Such a concrete zone, right? Everywhere it's concrete buildings. And if you take my home, right, in front of my home, 1.5 acre land, bare land. Behind my house, 3 acres. You got my point? And fully green. And fresh air plus fresh water. We are not taking water from the tap line, not pipe. Right. Well water. Even if you checked, it is not polluted. You got my point? Very fresh water. Chill water. Like when you are taking the water, it's like inside the fridge you are taking water like that. Very fresh. But when I see here, my God, what I'm trying to tell you is, do you have capacity to store? No, right? I think some houses, they don't have place to cook also. So every time they are buying from the outside. And when I'm seeing a house, right? I asked from Christopher sir, he said, sir, maybe 200 square feet with two or three bedrooms they have a house. Like this space, one house. I don't know how my room is bigger than this. My total 13 rooms in my house. 19 people. You got my point. So it's actually when I'm saying that space is very important, right? If you don't have space, can you keep a warehouse here? Can you maintain a warehouse in Bangalore? Can or can't? Never. You should keep warehouse somewhere in the remote area only. You can't keep inside the Bangalore. Why? Such a cost. In such case, can you order bulk quantity? You got my point. So there are several factors will decide ordering cost. One is whether you have capacity to store. If you, I can, right? At my house, I can buy all and I can store because there is a separate storeroom which is bigger than this classroom. So we can keep what we cultivated from our garden, right, behind the house. We can store everything inside the storeroom. Vegetables, coconut, right, and pineapple, banana. All these things we can cultivate and we can store. Here is it possible? Not right? Understood? Sri Lanka also same when it comes to Colombo. But Colombo also find not like this. It's very heavily crowded. It's heavily crowded. Okay. And in such case, your ordering cost need to be high. Why? Small quantities you need to buy daily basis. Yes or no? So when you increase your quantity, your ordering cost is reducing. Understood this one? Clear? Now, if you ordered more quantity, your ordering cost is less. Okay? When you ordered more quantity, your ordering cost is less. But on the other side, your holding cost is high. You got my point? You need to have a space. So if you ordered more quantity, your holding cost is high. You got my point? This is what called inverse relationship. When you are trying to reduce ordering cost, what will happen to holding cost? Increase. When you are trying to reduce holding cost, what will happen to ordering cost? Increase. Inverse relationship. Right? Plus your purchase cost. This is your purchase cost. These are the three costs. These are the three costs which deals with inventory cost. What is inventory cost? The purchase cost of the inventory, the holding cost of the inventory, and the ordering cost of the inventory. Purchasing cost, can you able to control? It is decided by you or it is decided by the supplier. Supplier, right? It is out of our control. But you can control. You can control your ordering cost and you can control your holding cost. Right? If you have space, you can order more. You don't have space, you can order less. So that is comes within your control. Purchase cost come out of the control. Therefore, organizations, if they really want to reduce the cost of inventory, they should find out mechanisms to reduce holding cost and ordering cost. They should reduce holding cost and ordering cost. Understood? Copy this image in your exercise book. Under that, write down the points that I am telling. Under this, write down a point. Total inventory cost comprised. Total inventory cost comprised. Total inventory cost comprised. Purchase cost. Purchase cost. Holding cost. And ordering cost. Second point. Organizations can manage holding cost and ordering cost. Holding cost and ordering cost. Ordering cost and purchasing cost different. One question, Sanchu, right? What is the difference between ordering cost and purchase cost? Purchase cost means what is the amount that you are paying to supplier, right? Ordering cost means you need to prepare what purchase order. You need to have some administration procedures. You need to prepare documents, and you need to get the quotation, and you need to evaluate the quotation. From that, you need to choose the lowest quotation, and then you need to send the purchase order. Then you need to do a follow up until the goods is received. All these things comes under ordering cost. Understood? Right. Write down next point. What I said? Cost control techniques used to reduce to reduce holding cost and ordering cost. Holding cost and ordering cost. Holding cost and ordering cost. In order to reduce total inventory cost. In order to reduce total inventory cost. You understood what I'm saying? If you actually want to reduce total inventory cost, you need to reduce holding cost and ordering cost only, right? Because purchase cost out of your control, right? So under that, write down total inventory cost equals purchase cost plus ordering cost plus holding cost. Write it down. Purchase cost plus ordering cost plus holding cost. Clear? Right. Now let's move to the dude. Purchase price. What is purchase price? What is purchase price? See, write it down. The price paid to supplier. Purchase price is the price paid to supplier. Holding cost. The cost incurred to hold inventory. Stock holding cost. Right? The cost incurred to hold inventory. Example, insurance. So the warehouse we need to insure, right? Insurance. And safety cost. Safety cost. For example, chicken, right? Let's say poultry business, you are doing chicken. You should have a proper defreeze capacity, right? Ice cream, you should have a proper defreeze capacity. Temperature. That is a part of what? Holding cost. Stores labor. Right? So the people who are working to protect the inventory, right? That is stores labor. Pest control. That is a major cost when it comes to stores, right? How are you going to protect from the insects and all, right? Did you visited to this Achi Masala and all these Shakti Masala, all these masala product warehouses, right? They are facing significant risk when it comes to pest control. How they going to store their materials, right? Some organization keep their own quality control procedures to protect the materials, raw material. Some they don't bother. So when you cook by putting chili powder, that chili powder maybe come out from cockroaches and all. Right. So that's why always making homemade is always good. Got my point? Because the pest control is the major risk when it comes to food and beverages industry. Understood? They even the departmental stores, right? Madhu, right? Is it easy to maintain the stock? rat will come, cockroach will come. So how to protect from those kind of insects, right? So we need to maintain so many controls to protect that particular material stocks. Okay, even the departmental stores, wholesale shops, they face that risk. Understood? Next one is ordering cost. Next one is ordering cost. Ordering cost, the cost incurred, the cost incurred to process the order. Example, the cost incurred to process the order. Example, administration cost, quotation analysis, raising purchase order. So all these are ordering cost. All these are ordering cost. So if I take the total cost function, see here, P multiplied by D, what is that? Demand multiplied by purchase. This is what called purchase price. This is what called purchase cost. Demand multiplied by purchase price. That is the total purchase cost. And what is this? Demand divided by ordering quantity. D divided by Q means demand divided by order quantity. That is we call average inventory. Right? Multiplied by ordering cost. This is the equation to get ordering cost. What is this? Ordering quantity divided by 2, average ordering quantity into cost of holding. So this is the equation to holding cost. Write down this in your exercise book. Very, very, very important. Right? Write down this in your exercise book. Very, very important. This equation will not be given in your exam. You should by heart. Mark that down. All the equation will not be there in your equation sheet. So if it is not there, I will tell this equation will be not there. Then you should by heart that equation. Okay. So far is it clear, Lama? Example for purchase price means how many units that you are purchasing, right? And what is the purchase price? So if you are for a company is purchasing raw material, let's take biscuit confectionery company, they are making biscuit. So they need to buy flour, right? So 1 kg of flour multiplied by 1 million or 1 ton. That is their purchase price. That is their purchase cost, right? So price is decided by the supplier. Then you place the order for the quantity. So price multiplied by the demand quantity is equals to the purchase cost. Is it clear? Right. Now, try out this question. Example number 4. Try out this question. I'll give 5 minutes. Do it. I'll give 5 minutes. Do it. 120 for both. Okay, I got one answer saying 120 for both. Sugi? Both wrong. Sorry, Sugu. You need time. No. Take your own time. You have to take a pen. And you have to write. So you mean how to do means how to solve this okay question. Okay, don't worry. I'll explain. Okay. Sugu, a company uses components at the rate of 6,000 units per year. Demand how much, students? D 6,000 units per year. Is it clear? Sugu, is it clear? Which are bought at a cost 1.2. This is what? Purchase price. Is it clear? Is it clear? Mr. Raghu, is it clear? The company orders 1,000 units each time. This is what we call quantity. What is the demand and quantity different? Demand how much you need for per annum. Quantity how much you ordered. You got my point? Fine. For Sugu, let's take his house. For per year, 250 kg rice needed. Fine. If his father buy all 250 kg rice in January 1st, will it work? No. He will buy 5 kilos, 10 kilos, 20 kilos, 30 kilos, likewise. Got my point? So if I take myself, for my house, per month, 100 kg rice we need. Right? We are not eating too much, but people, 20 people should eat, right? Right. So 100 kgs. So per annum, how much? 100 multiplied by 12,000, 200 kgs. Can I able to buy entire 1,200 kgs? Can I able to store it? No, right? Therefore, demand and quantity is always different. Quantity, how much you buy or how much you ordered. Demand is how much you need. Right? D is greater than Q. Right or wrong? Sugu, D is greater than Q. Right or wrong? Yes. Demand is higher than ordering quantity. You got my point? Understood? If Q is greater than D, then there is a problem. You are purchasing excess for someone else. You got my point? That is wrong. It won't happen. Okay? It places order and the average inventory held 500 units. What is average inventory? Q divided by it cost 20 each time place the order. This is what we call ordering cost. Is it clear, students? Understood? Explanation understood? Shall we do this question? Sugi, shall we do? Now, first I'll take ordering cost. What is the equation to ordering cost? CO multiplied by D divided by Q. Ordering cost how much? 20. Multiplied by demand how much? 6,000. Divided by quantity how much? 1,000. Get the value? See, ordering cost is 120. Kavi Varman is genius. He said 120, right? Now you understood. Sugi understood. Madi understood. Kavi understood. Reddy understood. Raju understood. Raghu. Okay, let's check. Fine. That's correct, right? Kishi understood. That's fine, right? Kavi, Kishi, Shugi, and Madi. Okay, is it clear? Everyone understood this one? Shall we move to the holding cost? Holding cost is equals to, what is the equation? Cost of holding into quantity divided by 2. Quantity divided by 2 we call average inventory. Quantity divided by 2 we call average inventory. Understood? Now, cost of holding how much? See, holding cost they gave 20% average inventory held. So 20% average inventory. How much? %20 average inventory. How much? How much? 20% into 500 into 1.2. 1.2. No, 0.2. How much? 0.200. 500 into 0.2, how much? 100. Holding cost is how much? 100. 100 multiplied by average inventory, how much? 500. Holding cost 20% per annum. 1 minute. Total holding cost, because holding cost should not be like that. It's too much. 100 is too much. Normally it won't that much of amount. See here in this question they said
500 units. Point is the price.
holding cost. Okay, what is the price of holding cost average inventory? 1.2.
1.2.
Yes, sorry. Yeah. The price how much? 1.2 500 units equals 600 value in 20%. How much? How much? 120. Okay. So 120 multiplied by average 500 equals 120. This is the holding cost. So 120 holding cost. Correct. So average inventory is 500. Holding cost is 20% of what? 1.2. 20% of 1.2. Is it clear? Right? So both are 120 only. Question number 5. Try out. Try to find out this question answer. Question, example number 5. Finished. Sugu? Yes. Reach. Madi, finished? Raghu? Quickly do it. Students like this. Holding cost is, see, holding cost is equals to, right? Cost of holdings multiplied by Q divided by 2. Q divided by 2 is known as average inventory. So here they said average inventory is 500 and this holding cost is 20% of 1.2. Right, see here the cost is how much? 1.2. Right, from this 20%. Okay, then 1.2 20% multiplied by 500 equals to 120. This is the answer. Is it clear? Normally the holding cost is CH is represented as a percentage of price of the unit. Now is it clear? So there is a small confusion here for you guys. It says 20% per annum of the average inventory held. Right? So average inventory held, here you should take the price 1.2. Q divided by 2 is given equation. See, actually Q divided by 2 is only average inventory. If you are moving to other way around, 20% multiplied by 1.2, this is given, into Q is 1000, ordering quantity is 1000, divided by 2, how much? Again you will get 120 on. You can directly take average inventory given, or else you can take the Q. Q is 1000 in the question, divided by 2, it is 500. Both methods you will get the same answer. Is it clear? They ask us to calculate annual holding cost. They ask us to calculate annual holding cost and ordering cost. They ask us to calculate annual holding cost and ordering cost. So let's take the holding cost equals right? Q divided by 2 multiplied by CH. Quantity how much? Monthly demand is 1500. Monthly demand is 1500. Concentrate. Monthly demand how much? 1500. Per annum how much? How many months? How many months? See, 1500 components. One box consists how many components? 10 components. You have to think that also. Huh? So concentrate. 1500 components means how many boxes? 150 boxes. So per month how many boxes we need? 150. Multiply by 12. How many months per year? 12 months. You got my point? So how many box we need for per annum? 1800 boxes. This is your D. This is your D. This is your D. Demand. Is it clear? Now, currently the ordered batches, how many units? 240 boxes. 240 boxes. Average inventory held, how many boxes? 120 boxes. Q divided by 2, how much? Average, right? Average inventory only Q divided by 2. They told it is 120 boxes. Multiply by, what is your holding cost? 10% of purchase price. What is your purchase price? 20. So 20, 10% multiplied by 120 box equals 240. This is your holding cost. Copy this. This is your holding cost. Copy this. 240. Students, is it clear? Is it clear? Understood? මම විතරයිනේ කතා කරන්නේ. ඔයාලා කතා කරන්නේ නැහනේ. සුගු? මදි? රඝු? කිෂි? Kishore. Kavi? Ready? Fine. See here, again I am explaining holding cost. Again I am explaining holding cost is equals to Q divided by 2 multiplied by cost of holding. This Q divided by 2 we call average what? Inventory. In this question, see here, they gave average inventory how much? 120 boxes. So directly I can write 120 boxes. Multiply by, they told holding cost 10% of purchase price. Purchase price is $20. So 10% of purchase price $20, answer 240. Now let's move to ordering cost. How to compute ordering cost? Ordering cost is equals to D divided by Q into cost of order. D how much? Annual demand we calculated. How much? 1800 box. That is your annual demand. So 1800 boxes. Divided by Q. Ordering quantity how much? 240, because they said currently ordered 240 boxes. So the ordering quantity is 240 boxes multiplied by ordering cost. Ordering cost is 32. This dekai 32. So 1800 divided by 240 into 32. How much? 240. This is the answer. Ordering cost understood? Very good. How many boxes components monthly demand? How many components monthly demand? 1500 components. Clear? Each one box consists 10 components. So monthly boxes how much? 150 boxes, correct? Is it clear? So 1 month 150 boxes. For per annum, how many months? For 1 year, how many months?
12 months.
Leap year, how many months?
Leap year.
Yes.
12 months.
Yes, 12. This is how ACCA will ask question. Right. For normal year, 12 months. Then leap year. Now some people will get confused. 12 months only. Can't reduce. So 150 multiplied by 12. 100,000. 800. This is your boxes annual demand. Chat understood? Clear? Online students, is it clear? Yes.
1800 divided by 240 is 7.5%. 7.5, sir.
So,
When we're ordering after 7, it's 8 order only. So it will be like 8 orders.
I didn't get it.
So you can order only once, so you can't add or order off. When it's done by Q is.
Yes. That is the loophole of EOQ. You got my point. That is a loophole of EOQ. EOQ with, let's take 2.25. Right. Can you able to get 2.25 box? Right. Then you need to round up. Right. That's every mechanism have their own loopholes. Right. So this is also like that. Right. So you 7.5 means you should take 8. 807. Okay. Raghu understood. Madhi understood. Sugi understood. Reddy. Kavi. Kishore. You too. Is it clear? Online students, up to now everything is fine? Right. Write down a very big heading again. Reorder levels. Inventory levels. Reorder levels. Reorder levels. Within bracket write down inventory levels. Inventory levels. Okay. Okay, the balance we can discuss tomorrow. Right? With that point, I will stop. Yeah. Now 8:22, that's fine. If I start that, it will take. Okay. So it's important. Tomorrow I am discussing EOQ and different levels also, inventory levels. Right? Class starts at what time? 4:30. Right? I'll stop with that.